Your Own CFO, Part 11, the chart of accounts. The chart of accounts is basically a list of all the accounts in which you record your transactions that take place in the business. So for example, accounts like cash or revenue or inventory or computer hardware. The data for every transaction that takes place is stored in these accounts. Now what's tricky is that there aren't really any rules around the chart of accounts. You can create your chart of accounts in any way that you want. The only real principle is to make them useful while avoiding clutter as much as possible. Some accounts will always exist, like cash, accounts receivable, or revenue. But an account like inventory makes sense if you're an e-commerce brand, but doesn't make sense if you're a marketing agency. There's also sub-accounts, so most businesses will have one cash account for each bank account that they have. This makes it easier to double check that the amount that you have recorded matches what's actually in the bank. But if you sell apparel, you might not have an inventory account for shirts and an inventory account for pants. You'll usually just have one inventory account and all the specific data is stored in what we call a subledger. Over there, you'll keep track of how many units you have of each color, style, size, and also their costs. And the total of all that should add up to what you have in your inventory account. So building a good chart of accounts does take some experience and judgment. In part 12, we'll talk about the three main financial statements.